All right, so let's talk about this first article from the Associated Press from AP. Rents reach insane levels across the United States with no end in sight. Wow, Matt, that sounds scary. What's the deal? What's going on with these rent levels?
Yeah, so last week we had an article from the Washington Post on investor interest, a kind of just like a mainstream take. And there's a couple ones that I want to talk about this week. I pointed to a paragraph near the end of the article that had some speculation about the impact of rising rents. This week, here's another one, an article from the Associated Press that speaks to rent increases directly. Yeah. And they call it insane. And this one had a lot of attention. It was displayed pretty prominently. Yeah. And I think that we've seen similar patterns and features in articles that address rent and housing affordability. And I'm going to summarize these patterns a little bit. So they start with a personal perspective on the issue. This is all these mainstream articles. It's like so-and-so is experiencing this problem. And then they expand it to this idea. Stories like these can be found throughout the country. Mm-hmm. And then they invoke inflation. They reference the record low inventory, and they return back to a personal perspective, tie things up for some closure.
Yeah, it seems like a pretty good model to write an article.
It is funny, but like I think it's written that way because it works. It's what people expect, and I don't fault them. And actually, as I was reading this, I was expecting, here's another one, but there's actually some good stuff in here and some really interesting ideas, and backed up by some credible sources. So I give this article an A. Just as a teaser, but yeah, I really like the issue.
Is it surprising? Last year, all the talk was lumber and steel, and surprise, now it's rents.
Yeah,
is it? Should it be a big surprise? We were saying last year talking about it when we were saying, why isn't anybody talking about this? The amount of growth that's going on. Everyone's again focused on lumber and maybe single family home prices, while rents were moving. It just wasn't gaining everyone's attention. Now it seems like it's at the focus for a lot of folks. And another example of whether it's inflation or you talk to some people, it's the greedy corporations and these big investment companies going in there.
And that's another element of an article like this. They find someone to kind of hint at maybe it's their fault. And then they also hint at a solution, which involves some fun stuff like rent control. But I was thinking about this, if rents are insane at this point, then what is the stopping point? And I mentioned this, in previous weeks, like when are renters going to be unable to pay and what are the signs that they are going to be unable to pay? Is it going to be seen in absorption numbers? Is it going to be seen in rent payment kind of delinquencies and late payments? Yeah. So I went and I checked. The NMHC has a rent payment tracker that actually they stopped running it. They stopped keeping track of it in December 2021, but it did record a slight decrease in the rental payment rate compared to the previous year. The Household Pulse survey, which was a pandemic-related data gathering effort, also records a slight increase in the amount of households that are not caught up on their rental payments compared to the previous survey period. So that one stopped around February 7th. I think this is way too soon to say that rental payment rates are trending one way or the other, but it's always worth paying attention to, I think. And I really am. I'm interested in the potential correlation between rent payment rates and rent growth. I don't know what your take on that is, or whether that's something that you watch. But it seems intuitive that if rents are too expensive, well, one, they won't rent anymore, or B, like they're going to miss their payments because that's just this hard stop to rent increases.
It comes down to really doing the basic operational basics of is really under or qualifying your prospective residents and tenants of these properties because you shouldn't be leasing to people who can't pay.
Okay.
Usually, general rule of thumb in the industry is your take-home pay needs to be 3 times what your rent is, and that's really the max. Any more than 30% of your take-home pay wrapped up in housing is considered housing burdened. Okay. And so, in most landlords have a rule you have to be making 3 times your rent.
Yeah.
And if not, you shouldn't lease to that person. And ideally, it's closer to like 20% or so. Now, if someone loses, a job, if something happens, there's only so much that you can do about that, and you try to work with that individual. But if you're qualifying your tenants on the way in, there shouldn't theoretically be that big of a problem. Yeah. Now, some groups will not be as strict, or just they're focused on occupancy, and they're say, sure, we'll sign a lease to anybody who walks in the door and is willing to put down, a deposit, a deposit. And,
okay, that's interesting because because that was that was just an idea that I had is this potential correlation, but you think that's maybe more of like a property management thing or just like having the systems in place to run it properly rather than a bellwether that you should reduce the rents.
I think it's a lot of different factors. I mean, so we're sort of unwinding from this eviction moratorium paradigm that we've been in. Now the eviction moratorium sunsetted in what was July last year, but still a lot of local municipalities and counties where you actually go to court for an eviction, a lot of justices have been very hesitant to proceed with evictions. Depending on where you are, you're still doing it. I mean, we had a handful of evictions we had to deal with the past couple of weeks, but some of them, we kind of they were dragged out an extra few weeks because just the judges are they're very much
they got a lot to do right now.
well, they got a lot to do, but they're like, okay, the pandemic, coronavirus, so we're just giving everybody a break. Now there's also an incredible amount of rental assistance that's finally getting out, which has been helping things. I think in Indianapolis, I think they've gotten over $100 million out of rental assistance over the last year or so, and so that should be helping things.